Hello everyone, welcome to the Daily Forex Trading Signal with Sir Pips-a-lot. We'll be reviewing what happened on the Monday the 26th. Even though we didn't preview it, existing home sales wound up working out okay because it seemed as though stocks were in a positive mood, especially early. We'll also preview January 27th. We've got two pieces of news worth looking at. And I'm going to make it a brief signal. This is coming out pretty late. I decided to take the weekend off, including Monday, and I was out of town, getting back late tonight. Kept on top of things, but just getting back to get you guys the signal. So I'll try and keep it brief. All right, first off, existing home sales yesterday coming out a bit better than expected. Again, not really a huge tradable deviation, but a positive number for once. Something in higher than last month and higher than forecast. So let's see what happened. I think it was about 45, 50 pips on the dollar yen. Let's take a look. It looks to be about what we got. We went up from about the 89.20 level up to about almost 89.60. Realistically, this chart's a little off. Pre-release was more down here around 15. So made a little over 40 pips in the first surge, pulled back, even made a little higher. So it wound up being a pretty decent trade, even though it wasn't necessarily on our radar, and I didn't recommend trading it. But just thought I'd show that some food for thought. When the market's looking for an excuse to rally, like the market really was this morning, something to rally behind. Housing, positive housing number can be just what it was looking for. But that was really it. They're moving ahead for tomorrow, Tuesday the 27th. We're looking at German IFO and Australia CPI. The German IFO, we trade the business climate number. This indicator lately has had a lot of fake outs, but last month was not so bad, coming in lower than expected. You saw the euro here at about 46.75, sell off a good 40 pips, and then turn around. Realistically, usually what works best with the IFO, at least lately, is to look for a turnaround and trade against the number. That may come quickly, that may come, it may make a little bit more of a move like it did last month. You look at here, this is the kind of fake outs we were having for a few months, and then last month worked out pretty well. So, realistically, I think what you should do is try your best to gauge the sentiment heading into the number to give you a bias. If the euro seems to be topping out, then a positive number is not necessarily going to be a breakout. It's probably something good to sell into. Whereas a sell might have a little more traction if you're near highs. If you're near lows, vice versa. If you're in the middle of a range, then my best guess would be to look for a shift in sentiment based on a big surprise in the IFO. You know what I mean? If there's a big surprise, a deviation of say 3 or more, 2.5 to 3 or more, then expect kind of a bit of a turnaround. But I'm going to go out on a limb here and say the euro's been pretty responsive, and I'm going to say, you stick a gun to my head. I think this one's going to work this month as opposed to just being a quick fake out. So it comes out at 84 or higher. I'd like to buy the euro dollar, looking for 40 pips. If it comes out at 78 or lower, I'd like to sell the euro, looking for 40 pips to the downside. If it comes out closer than that, or if it's just one of those situations where you're too close to support or resistance, then definitely wait for it to pop up on a good number a bit and sell it, and vice versa, buy a dip if it comes out a little worse than expected, because 4 or 5 months ago and further back, this number created a lot of sustained moves, but in this more volatile type marketplace, we're not getting the same type of reactions out of it. It's a little knee jerk and then a turnaround. So be wary of that. now at we're not trading any of the U.S. data, nothing really major here. Consumer confidence is just as much of a disindicator as it is an indicator, and people are really starting to realize that. The composite 20 house price index could do something, but not really worth trading outright. Australia CPI, though, we get quite a few numbers out of Australia for this. There's the weighted median, the trim mean, and the headline number. We used to always trade the headline number, and then it became pretty obvious that the average numbers here, the weighted median and trim mean, were having a little more pull on the market once they started releasing those. Expectations for the headline are negative 0.4 quarter on quarter, 3.6 year on year, and then the expectations for both the weighted mean and the trim mean and the weighted median are the same actually, 0.8 for the quarter on quarter, and 4.4% for the year on year for both the trim mean and the weighted median. I'm going to say that if you got to focus in on one number, I would focus in on the trimmed mean number, and look to trade the quarter on quarter such that if it comes out, the way to do this is the same thing we've done for a lot of our CPI figures: is sell a spike up and buy a spike down. That's really been the best way to handle this, and that's also what I'm going to recommend on this one here. Let me show you what I'm talking about. You can see even the last quarter, this was our strategy on the last release back in October, excuse me. It came out higher than expected, and so my recommendation was to sell a spike up. And so if you did that, you sold right here, you could have sold up here and gotten some money. If that spike was a little too quick for you, the reattempt up here was another good opportunity to sell, and there was even more profit in it. So I'm going to say again, if it comes out higher than expected by 0.2, let's okay, so it's expected at 0.8. All right, if it comes out at 1% or higher, look to sell a move. Look to sell an up move after it's moved up a bit. Sell into it. Expect it to reverse. If it comes out at 0.6 or lower, I would look to buy a down move. Have it come down and try and buy it as it starts to come back up. That's my recommendation for Australia's CPI. All right, and of course it would be best if the numbers agree with you. However, if there's a lot of conflict, all that may mean is that it doesn't spike your way, if you know what I mean. Because if there's a ton of conflict and it spikes down, and the trim mean came in low, that makes it even more likely it's going to give back those losses. So just food for thought there. That's it for Tuesday. Real quick look at the chart of the euro.